Hey everyone, welcome back to Corporate Decoder, the place where we take complex financial reports and make them as clear as day. Today we're diving into Cineverse Corp's latest report, and let's just say it has got some interesting tidbits about how they're doing, especially as the holiday season approaches. Before we jump in, if you like getting these kinds of plain English explanations of what is really going on behind the corporate curtain, make sure to hit that subscribe button. And if you want to chat more and get even deeper insights, join our Discord community. The link is in the description below. So, Cineverse Corp, a company you might know for their entertainment ventures, has just dropped a report detailing their financial performance for the 3 and 6 months that ended on the 30th of September. It's essentially a check-in on their business health, and frankly, the numbers often tell a more compelling story than any press release. We're going to cut through the jargon and see what is really moving the needle for them. This filing, what they call a Form 8, and 8K reports are super important because they signal that something significant has happened that investors need to know about right away. In this case, it's all about their financial results that just came out for the summer and early fall. Think of it as the company giving us an update on how much money they made or lost and why. Cineverse's main way of raising money and how investors can own a piece of the company is through their class of common stock, traded on the Nasdaq under the ticker symbol CNVs. This is the stock most people would be looking at if they're interested in the company's performance from an investment angle. Now, the really juicy part for us is the actual financial performance. The report tells us that on the 14th of November, Cineverse put out a press release with their financial results for the quarter and the 6 months ending the 30th of September. This is where we get the nitty-gritty numbers. While the specific tables aren't directly in the text here, the press release they're referencing, Exhibit 99.1, would contain them typically. We know that for companies like this, investors are always looking to see if revenue is growing, if they're managing their costs, and ultimately if they're profitable. A strong performance here means the company is likely heading in the right direction, attracting more viewers or users depending on their business model and making smarter business decisions. Conversely, declining revenues or increasing losses can signal trouble, potentially leading to a drop in stock price and investor confidence. The report also mentions a few boxes that the company didn't tick. These relate to other types of corporate communications, like if they were trying to get people to buy their stock during a special offering, or if they were announcing something big related to mergers or acquisitions. By not checking those boxes, Cineverse is telling us that this report is solely about their standard financial results update, and not tied to any other major corporate event that would require additional disclosures. It keeps things focused on the core business performance for this particular filing. Now let's try to infer what we can about their financial health. When we look at a company like Cineverse, we want to see if their top line revenue, the total money they bring in, is increasing compared to previous periods. We also want to see if their expenses are under control. If revenue is going up faster than expenses, that is a good sign, as it usually means more profit is being generated. However, if expenses are growing faster than revenue, or if revenue is shrinking overall, it could indicate that the company is struggling to attract customers, facing increased competition, or managing its operations inefficiently. A key number to watch would be their net income or net loss, which tells us if they are actually making money after all costs are accounted for. For example, if their net income in this period was significantly higher than last year, it suggests a positive trend and potentially a more solid business model. On the other hand, a widening net loss would be a red flag, suggesting they are burning through cash and might face financial challenges down the line. We'd also look at cash flow to understand how much actual cash the business is generating or consuming, which is crucial for day-to-day operations and future investments. One thing to always remember is that a single period's results, while important, don't paint the whole picture. We need to look at trends over several quarters or years. For Cineverse, given the nature of the entertainment industry, we'd be curious to see if their content strategy is resonating with audiences and translating into financial success. Are they adapting to new viewing habits? Are they investing in properties that have mass appeal? These are the strategic questions that the financial numbers help answer. For instance, if they've launched a new streaming service or digital platform, signs of strong subscriber growth and user engagement in these financial results would be a very positive indicator of their future direction. Understanding the broader market context is also key. In the competitive entertainment landscape, companies are constantly vying for user attention and dollars. Factors like new technology, changing consumer preferences, and the actions of major competitors can all significantly impact a company's financial performance. Cineverse's ability to navigate these external forces and maintain a robust financial footing will be critical to its long-term success. In conclusion, this report, focused on the financial results up to the 30th of September, is a snapshot of Cineverse Corp's operational health during that period. While we don't have the specific numbers laid out in this text, the fact that they are reporting these results via an 8K tells us it is significant news for investors. The ultimate takeaway hinges on whether their revenue is growing and if they are managing their costs effectively to either increase profits or reduce losses. We will need that accompanying press release to truly gauge the strength of their performance. Alright, that is our breakdown of Cineverse's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.